All right. Well, let's get into it.
Let's get into it. We're back.
We got another episode. A lot of stuff happening as always, like every week. But let's I think we should build on kind of what's been going on in the market, right?
Current events,
values, not really interest rates so much.
Those are
still
sitting
high.
at 7. Yep, still high.
Still high. Values, inventory.
They said inventory has been increasing month over month, 50%.
50%, right? This past month. Now, do you think that's a function of the spring market, like spring surge, here we go? Or do you think it's something else?
That's a great question. Yes, by the same token, but I think that's more so force of habit, because where are these people going to go? Okay, so inventory is up, but I feel like you still have a lot of buyers on the fringe, but then people are hesitant because interest rates are sitting at 7%, and that's probably for your ideal credit score.
Right.
And running maybe 7 to 9-ish for lower end, more subprime market situation. I'm a little bit baffled. What do you think? Where are these properties coming from? Are these older people then that are like downsizing?
I think it could be a function of that. I mean, my wife and I are personally in the market right now looking for a house. So like we're kind of experiencing it a little bit, like we talked about last time. But obviously I don't sell, our brokerage doesn't sell, we don't sell houses. So like it's kind of looking at it from a different lens, I guess.
That's interesting. Are you representing yourself?
No, I'm not.
Okay. One less headache.
I'm not.
Good.
No. I know what I know, and I guess I sort of know what I don't know.
Yeah.
Maybe.
That's good. That's good.
But I don't know. Like we've been going through homes in our market, suburban Philly, or called Bucks County. I feel like we've been touring a lot of older people's homes. So it's like funny you say that. We've been touring a lot of older people's homes.
Yeah.
And they're homes in which they've like moved out already.
Yeah.
So they either bought something or downsized already, or went to their vacation home or Florida home, whatever it is.
That's a great perspective. Yeah.
I think it could be that people trying to sort of cash in on
they're situated elsewhere,
piece of the market, and don't have an issue moving.
Yeah, because that was the conundrum for some time for younger families, I would say. My equity and the value are at its or high, maybe not at its peak.
Yeah, but high, right?
But where do I go? And if I do get this money, I'm going to be spending it, putting it into another property that's the same amount, maybe more for what I got. Because then if you're scaling up, so I feel like that caused some stagnation. But now
it's not like you're selling your house and you're buying your upgrade for nothing, or the same thing you did last your first house, starter house, whatever.
Exactly.
It's like that's not what's happening.
Yeah, you're upgrading in cost too, and there's no guarantee that this will appreciate. It's almost like if your property didn't appreciate, you wouldn't even be able to afford this over here. So now that you can afford it, you're like level, as opposed to we went up and we have ceiling and room for growth. Yeah. Unless it's a value add. And are you seeing like value add properties since it's older people?
Like things that need to be renovated?
Yeah.
Yes and no.
Okay.
I don't know. It's a mix. I don't know that I see one,
that more than
one
the other.
Leaning the other way. Yeah. I think it's just sort of generic. But your question though is spot on. Why are we seeing this surge?
Yeah.
I mean, that's
so
really
interesting.
Right. Yeah. Like, and that's the topic really for today, right? Like, we're in the spring.
Yep.
Or summer almost, I guess.
Yeah.
Right? What's the surge? What's happening with the surge, right?
Yeah.
Like, what's it affect, and where's it coming from? What's it affect, and how we're gonna deal with it? Because there's more inventory in the market, and I don't know if I'm seeing price decreases on both sides, commercial and residential side. I don't know if I'm seeing price decreases, but I feel like I'm seeing a little bit less aggressive pricing.
Yes, I will say that. Definitely less aggressive pricing. I think depending on the area too, because when we were talking last week, I'm realizing that properties in my area are coming on market in the Collegeville, Royersford
Yeah.
area. They're starting high fives, low sixes to
Yeah.
start, all the way to $1 million. But now I'm starting to see some threes,
Wow.
fours. Yeah, 359. I saw a property, not in the same area, but
Is it livable?
adjacent. Yeah, surprisingly. I mean, and then you also it also begs the question. It's an HOA and it's more of a townhome situation, but townhomes for quite some time have been going mid fours to mid fives.
Yeah.
So if it's priced in this mid three, is it a gimmick to ratchet it up to four? Which even still, I feel like is better than your starting out at 445s and
Sure.
450s and such.
Sure.
So I think like a lot of people, I'm staying tuned and watching. But then I don't know if this is going to encourage a robust flocking to the market, which will then, in and of itself,
Yeah.
ratchet prices.
See, there are still a lot of buyers out,
Yep.
I think.
Yep.
Because I see it on the residential side when I'm looking at houses for
Yeah.
our family, like I see it. I see the competition, like,
Yeah.
they're still out there.
Yeah.
I mean, we went to an open house a couple days ago in Central Bucks, and there was like,
It was packed.
there was like a line to get in. It
Yeah.
was crazy.
Yeah.
And then on the commercial side, I think for like really right priced investment real estate,
Yes.
there's that same sort of buyer activity that exists. You'll on those same lines. I went on a tour in the Lancaster market, actually, for an apartment community that went live active on the market, right? Unlike what we see a lot of these like off-market
Yeah.
trades. Like this was live active on the market, and they did structured tours, and it was
Busy.
there was a lot of activity.
Wow.
A lot of activity and a lot of offers already flowing in. Now, does that mean it doesn't necessarily mean like it's going to sell at list or ask or above, because I think pricing was really aggressive.
Mm-hmm. Okay.
And unlike the residential market where like you fall in love with something, it's easy to go like 10, 20, 30, 40, 50
Yeah.
grand over ask on a
Yeah.
$750,000 house. Like
That's pennies.
yeah, on the
Commercial
yeah, on the
side.
multi side, it's like sort of difficult because they penciled. Can you get the debt? Does it not work?
Yeah.
Like that whole structure. So
Yeah. That makes sense.
I don't know. So I don't think there's more commercial inventory on the market.
I'm not seeing that.
I'm not seeing any change. Right?
No. Especially like industrial flex warehouse. I feel like at a point it was so hot. Now I feel like it's cooled and there are opportunities for people to get in. In looking at the looking for the play space, we are open to flex warehouse and then also retail. Retail, I feel like, has slowed some of the demand there. Not to say that they're not out there, but I feel like there was much more momentum beginning of the year to middle of the year.
Well, you got to remember, we're also in like our cyclicality is
Yeah.
opposite of how the residential world exists.
It's
right?
true.
We're like holiday hits
Yeah,
and people are on vacation.
it's
for
true.
the summer.
Well, yeah, and we just had the ICSC event,
Right.
so I feel like it's been silent
yeah.
since that
Yeah.
since that happened. So I'm curious to see, what percolates over the next coming months. We are getting some activity on the gas station
station listings.
convenience.
Yeah.
I think it took some time to ramp up, and also with listing it as a redevelopment opportunity.
Yeah.
We didn't necessarily see the uptick right away, but I think now we're starting to see the shift in mindset and the more people who are understanding that it's something they have to take on.
Yeah, and I think, that sort of piggybacks off this. I feel like the redevelopment world is still like sees that supply demand imbalance, despite the fact that there's, especially on the commercial side, but despite the fact that there's some inventory delivered, or not even delivered, just brought to market.
Yeah.
Because it's not new inventory. It's not a 50% increase in the residential side of new inventory necessarily. And it's also only 1 month of data, which
is not
is
really
like,
indicative.
what is that really telling us? Like
Yeah.
we're also in this we're also in the spring, summer. Like this is when it's
Yes.
supposed to be more homes
Agreed.
available.
Yeah.
So,
Yeah.
so I don't know that it's just headline noise more than
Yeah.
anything else,
It's
but
not really a
there
phenomenon.
definitely are
Yeah.
more homes. But on the commercial side, I feel like you position your listings as redevelopment opportunities if they really are.
Yeah.
I think there's still a ton of developers that want to be out and delivering product, in these suburban Philly hot
Yeah.
supply constrained
Absolutely.
markets.
I think that that's the focus now. I think that that's where the shift is going to. I was reading in the trades because you have office inventory that may or may not be utilized moving forward. So you can repurpose that. You have industrial flex warehouse. I think there you have more retailers, businesses going the experiential route. Even office that is selling, we were talking about it's office with amenities, not just your BCD class. Like those are almost out. It's people want to be working somewhere where there's an allure, an attraction. There's got to be something that they can tap into that's close proximity so that you limit drive time. Once you get there, you're here. It is what it is. How can I um, enhance the time that I'm here? And I think having a creative mindset and being open to saying, how can we take this existing business, provided that the zoning allows for it, that'll be interesting. But how can I take this existing building and repurpose it to something that people can experience so that we have traffic and there's a drive for it? Meanwhile, it's not just sitting there going to blight.
Yeah. He experiences everything. I
Yeah.
mean, for sure. Same thing with on the apartment side. Like you create that experience with
Yeah.
amenities and the feel of the community,
Yeah.
and it's in high supply markets where there's a ton of product delivered. Like that's the differentiator sometimes, right?
Absolutely.
Because all the units typically look the same.
Yeah.
Oftentimes they're designed by the same architects and engineers anyway,
Yeah.
right? So like it's the experience.
Right.
It's funny because on the apartment side out here,
Uh-huh.
I feel like experience is great, but do you need it to lease up and probably hit your rents? No, because we're in such a tight market over
Yeah.
this way. But
Yeah.
you're right though. I mean, that's going to be a big factor. So traditionally, when you'd see a headline like 50% more product on the
Yeah.
market month over month, your mind immediately goes to what's going to happen now,
Yeah.
right?
Yeah.
Like, are prices coming down? Is competition loosening? Like,
Yeah.
what does it do for underwriting? And then on the housing side, I start to think like, well, what's it do on the multifamily? How's it affect multifamily? Is rent growth going to slow? I mean, it's 1 month of data, so like I feel like we're getting
Yeah.
ahead of ourselves by even talking about it. But it's a question, I guess, to talk about.
So the I have a colleague who's working with a tenant, or excuse me, an owner, and they have a property that they're looking to lease, and they just lowered the rent to get better quality applicants, and they're situated in King of Prussia. Because we were having the same conversation, they're still in residential, and because I have the commercial insight and perspective, we always have good conversations. And um, I'm like, do you think that that is indicative of what rent across the board is going to do? Are they going to incentivize leasing up by lowering rates, or make it more of a creative structure?
Like more
Like,
concession, you're saying?
yeah. Like you have first right of refusal on your lease term coming up. Like, I mean, I don't know what other kind of sexy terms you
Yeah,
can put
free
in
rent,
there.
gift cards, like
Yeah.
waiving stuff. That's
Yeah.
usually the
Yeah.
route
Yeah.
those developers go.
So I was curious to see on that side, but here I feel like on the commercial side, um, we had put an LOI for a space that had been sitting there on market for at least 80 something days. And we initially asked for free rent. They pushed back. So we put the months that we asked for free rent on the back end so that this way the landlord would have the full duration. Um, but I think that there was a miscommunication. We thought that they were asking us for two deposits. So the first deposit that was listed in the advertisement was 1 month, at 1 month rent and 1 month security, which totaled $18,000. And the way that they had worded it instead of having a template like we do, they had written an email. The way that they had worded it in the email, it seemed like they were looking for another set of $18,000. So we pushed back on that and ended up walking away. And they were like, "That's fine. We can do 9,000." And when they said that, I was like, "Oh, that's not what we weren't even asking for that." But just to have something on the hook, they were willing to say, "Okay, you're going to give us this full 7 years of rent. We're just going to waive one of those months of."
Are you saying this because you think that the uh, climate, supply demand, really demand climate has cooled a little bit?
I think the
And
demand
the landlord
climate has
thinks they had the power, but
Yeah.
now it's sort of shifted back. On
Yeah.
I think
Yeah.
on the retail side, tenants always had the power.
That may be that's probably true.
Even in like supply demand imbalanced markets and REITs in terms
Yeah.
of retail, I feel like the tenant always had the power.
Yeah, that's true. Especially if you're presenting a really attractive proposal.
Yeah.
Taking on a long-term lease at ask.
Now, yeah, and now if you're like a startup,
Yeah.
you often don't have the power.
Well,
But if
that's what this was.
if you come in as like, we talk about national retailers or
Yeah.
regional retailers, like brand name.
Oh yeah, they're
type
going to
groups,
cater to you all
like
day.
you have the power as the tenant. I
Yeah.
think even in a market where you're looking for 3,000 square feet of space in a grocery anchored center and there's like one or
Right.
two choices, maybe, I think
Yeah.
you still have the power as a
Oh
tenant.
yeah, I definitely agree with that. The more mom and pop, and this was a startup
Okay, so that's why I run into
daycare
those
situation.
areas. Yeah.
So it
those
was
issues.
it was interesting. I didn't expect that response because I didn't realize that we had that miscommunication. They really were just asking for the second installment of the asking deposit.
Well, you're probably also dealing with a mom and pop landlord, if I
Absolutely.
suspect, right? So you have that
Absolutely.
other hurdle to deal with that we constantly
Absolutely.
know exists, right?
Yeah. Yeah. Yeah.
Not always good. Mom and pop tenants, great to work with.
Yeah.
Mom and pop landlords, great to work with, but not always good indicators of how the rest of the market tends to
No,
behave. Right?
and not great at paying because they're not prepared.
Sure, not prepared. Of course.
Montgomery County Mall though is losing retailers.
Yeah.
So
Well, that's going under redevelopment, so.
what is it going to be turned
I
into?
honestly don't know. I heard, a last mile redevelopment. I heard mixed use. I honestly don't know. I hope it's not last mile because I just feel like that kind of destroys the retail community sort of vibe you had there. But
Yeah,
there's plenty of room for that
absolutely.
on 309. Like,
Yeah,
why do you
yeah,
put it
yeah.
there? But
Yeah.
I'm not really sure, to be honest
Interesting.
with you. So do you think, whether it's actually happening now or not, but do you think if it continues, more inventory coming on the market, do you think that shifts more residential inventory coming on the market? Do you think that shifts how industrial and retail users look at the market?
Definitely, because now your marketplace may be shifting. We don't necessarily know who's going to come in and buy those properties, where they're going to come from, what their income situation is looking like, because they could be high income earners and seizing an opportunity, or they could be buyers on the fringe that didn't necessarily really have
stressing
it.
and then like
Yeah,
cutting
and
out.
now here's a little bit of a windfall, so I got to seize this opportunity. So I think it'll impact, depending on how it shakes out, which then puts us back in a wait and see phase. But when you see what the makeup of the community will be, then you can kind of speak to the demand of what the community needs. Is it more play spaces?
Yeah. Who's the demographic? Who's moving in? It's families? Is
Yeah.
it older people?
Absolutely.
Yeah.
Because I feel like industrial warehouse space now is not necessarily just relegated to manufacturers. It had become the new sexy thing. You're tucked away, but here's this amazing space. Once you walk in, you're transposed and transported into a new place, a different setting, somewhere that you can immerse yourself, and then you can go away. And because you came for this experience, you know that we're here. So because it doesn't necessarily relegate itself to, I am in the industrial manufacturing warehouse space, I think that who moves in will be important. And then for retail as well, too. How are you satisfying the needs of the community And how are you seizing the opportunity to cater? Because now what is available? You have so many stores that are closing. So you have space coming available.
Yeah.
So I don't think a lot of the closures have taken effect yet. So that might be something positive that we get to um, leverage. And in the meantime, now kind of assess who are the players that are currently out there that would be looking for space, and what type of space will they need uh, to facilitate the business.
Yeah, I think there's definitely opportunity for users out there to break into a market based
Yeah.
on where demographics go and what's happening. I don't think it's necessarily a bad thing and just provide like that there's more residential product on the market. I think it just sort of something you need to be cautious of as a retail or industrial user,
Yeah.
you know.
Yeah. To
Um
just see, okay, now it this demand has been met.
yeah. And I think the more important question almost is like there's more product, but like where's it selling at? How quickly is it selling?
Yeah.
Because that could be a whole new story for a retail industrial user. I mean, then it's like,
Yeah.
great. I'm super happy that this is a very transient market right
Yeah.
now, a traditional transitional market right now, because there's a long runway of better demographics coming in or whatever it
Yeah.
is, you know?
What is your thought on this? Is it like the cart before the horse, chicken before the egg type of deal where do you think retailers and industrial flex warehouse users have the power to drive who comes to the market?
Oh, yeah. That's a great question. It is like chicken or the egg.
Yeah, right? Because I was just thinking about it on the flip side, like people want to live near where there are things.
They do. They definitely have the ability to drive, but I think it starts with residential.
Hmm.
Unfortunately, I
Yeah,
love it to start the other way,
that would be
but I
cool.
think it's rare.
I agree.
And like, I think it's pretty rare, but I think it starts with residential. Like all these people move in here,
Yeah.
so I think, I mean, it probably starts with like school district and lifestyle,
Yeah, yeah.
actually. And
Yeah.
then people move in, and then like your Whole Foods chases and then comes in
Yeah.
because the demographic is there and the
Right.
density is there. And then all those people that, are now at a place where they've got so much unlocked, so much equity in their homes
Mhm.
and, whatever, can unlock that
Yeah.
and sell and move into a new market, and then higher price income earners and stronger demographics come in and it just keeps
Mhm.
building. So
Yeah.
I think it starts with residential, but then like really explodes with the retail,
Yeah, yeah, I
right?
agree. I think that that's a smart way to look at it. Like, I wonder in forecasting, I was talking to a young lady that works for Chase, and she was saying that they're opening up, it's either 25 or 40 something new
Yeah, they're on a tear, right?
locations.
Yeah.
And I wonder how, like, what their criteria is for positioning, even in the midst of, this uncertainty that we're experiencing. Like, what elements would anchor them to say, these are our non negotiables? And if a market has these elements aligning, we break
So
ground.
I don't know Chase specifically, but um, traffic is what it is, and
Hmm.
rarely I don't know that I've ever seen it really go down except for declining little pockets. But like, right, when was the last time traffic pattern counts went down like year to
I don't
year,
know. People are
right?
outside.
So like you hit the minimum traffic, right? Yeah, you hit the minimum traffic criteria, like your household income and like number of households, rooftops in a
Yeah.
particular geography, like I think the question is like how quickly is it changing?
Yeah.
Because if you hit the minimum and you've got a positive upswing, it's like that's a pocket
Yeah.
to go into,
Yeah.
right?
Exactly. The
Like
momentum is
the
there.
momentum's there. Yeah,
Yeah.
exactly, exactly. But you're
That's
right
very
though. There's a lot
interesting.
of your point is right. There's so much shifting happening that like it's sometimes you have to think like how do I really focus in on what's the right
Yeah,
space?
like if I was in that role and I was leading the charge on acquiring re- uh, real estate on behalf of a user retailer,
Right.
what should my driving forces be? Like what do you think would be, of all the demographics that we know make sense, the households, household incomes, are there any things that may be more obscure and specific to commercial that you think would be top priority for saying, okay, we're planting our flag here.
Yeah. Well, I think we did a segment early on about this, but it's like I think almost every time it's household income,
Mm-hmm.
it's population,
Mm-hmm.
it's the growth of those two
Mm-hmm.
things,
Mm-hmm. Yeah.
right?
How do
And
you determine growth? Like what indicator or what platform produces a metric that you can say, okay, these people show growth is happening. I trust them enough to.
yeah, I mean, there's data providers you can buy access to. Like
Okay.
for us in our space, CoStar is a good resource for
Yep.
it, but
Yep. Yep.
census data is another place you can look. Like
Yeah.
it's historical, but
It can still
also
forecast.
future. Yeah, I
Yeah.
mean, like I feel like the future is more important.
Mm-hmm.
Although all that data always lags, so take
Yeah.
what it is. But
Yeah. But I mean, if you see a trend, like an uptick in the
it
history,
gives you an idea, right?
right?
It's almost usually not going to turn the other way
Right.
unless your market is like anchored by like okay, let's say Merck,
Yeah.
right out here, right?
Yeah.
You're anchored
Oof.
by Merck. If Merck were to pick up and say we're
We're
going
out.
somewhere else,
Yeah. Yikes.
right? There's a lot
Lansdale
of
would be a ghost.
yeah, it might be a ghost town. It probably wouldn't though,
No,
just
no,
simply
no.
because like you definitely see downward
Yes.
outside migration,
Absolutely.
but it wouldn't be a ghost town just simply because we're so dense here that there's like all these other
Yeah,
fringe
it's true.
businesses. But you're right. Like if you
It
go
would
into
feel like a mass migration
yeah,
because there's so many people.
pick
who
like
live
the
somewhere.
middle of Texas where some headquarters is opened up and
Yeah.
like that's all that exists
Or
there.
Bentonville, Arkansas.
Yeah,
If
yeah.
Walmart goes away.
Right.
Yikes.
Well, that's why. Well, I shouldn't even say that because that's why some of these steel towns and like coal towns
Yeah.
like disappeared. But
Mm-hmm.
that's more of like a whole industry drying up as
Yeah.
opposed to
Yeah.
one specific
retail.
user.
Yeah.
But
Mm-hmm.
it's interesting. So on the other side, like on the other side of that, or I guess on the same side of it, um, developers, investors, like
Yeah.
you're focused on a lot of that stuff right now. You're focused on a lot of those changing demographics and shifts in inventory and what are you looking out for?
How do you shift from being a broker or a, kind of, I don't want to say small time to minimize it, but investor to a developer? Like what is that mindset shift, or what is the decision making process to say, you know what, I want to take it to the next level and develop properties, whether that be residential to multifamily, to like larger size projects.
How's that shift happen?
Mm-hmm.
That's a good question. I think it happens slowly.
Mm.
You know,
And do you feel like it's primarily like the access to capital is the main driver, or does the mind shift
I think it's a
happen?
mind shift. I think it's
Okay.
a mind shift. You go from transactional to, more. Yes, some developers, investors are very transactional by design, but you go from being. I mean, nobody's more transactional than a broker, right?
Right,
Like,
right.
We're all
Yeah.
about the transaction.
Yep.
Yes, we want best for clients, but like you're all about the transaction.
Yep. Mm-hmm.
But you really need to shift the mindset from being transactional to, I'll call it long-term oriented.
Yeah.
Which long-term could be, in and out in a year or less, but you're more long-term oriented. It's not just about making a transaction happen. It's about how you effectuate a business plan post-transaction. So that shift is probably the biggest thing because you make your bread and butter
Yeah.
as a broker being transactional
Yeah.
and you get in trouble as a developer investor
For being
transactional. So
interesting.
that's the hardest part. Being able to turn on and off. And
Yeah.
oftentimes the best is to just do it
Switch.
slowly and switch.
Yeah.
I think.
Yeah.
Or have a partner that runs half your business and you run
Yeah.
the other half. But
Well, yeah, and because I'm wondering how that plays into the thinking, like, so when you transition to the developer side and you're looking at the market, you're now looking at it with the same set of eyes, different criteria, and then your outcome or your goal is different, but you're also evaluating the marketplace to figure out, do I fit in here, and not just fit in, can I thrive here?
Yep.
And the market activity or human behavior, all of those elements come into play. And now you're, I guess, more well-rounded in your thought process of things and how you approach it.
Definitely, it helps both aspects. I mean, it's kind of like the with what's happening, the new inventory or new inventory, more inventory coming to
Hmm.
market, not necessarily new, but more inventory coming to market, and kind of the shifts we're seeing. There's two different lenses you're looking at it from brokerage, different perspective from a developer and investor, right? Like a developer and investor, I think you're more focused on what's happening with construction costs.
Yeah.
You're very laser focused on capital, right? You're very focused on some of the population and demographic trends. If
Hmm.
you're a developer, what are your users doing, your tenants doing in the market?
Hmm.
A broker still has that focus, but we're the developer looks at it, an investor looks at it at a different lens.
Yeah, sure.
And I think some of that stuff they're really focused on. I mean, I think developers today are really focused on replacement cost. You
Talk about
know,
that because I heard somebody say that on one of the trades they were speaking to it. And is that like I know replacement costs from insurance because I'm also a licensed public adjuster. So I know it from that perspective that if God forbid something happens, they're not trying to give you actual cash value. They're trying to pay out whatever the replacement costs are. But if materials are so expensive, like I can see how that impacts the insurance company. How does that impact the developers and investors?
well, investors, most people you want to buy below replacement cost,
Okay.
at or below, and
Okay.
ideally below, right?
Okay.
Because that's where you're finding the best, I think, value, and
Okay.
most people see as value. Because if I had to go replicate the same product in the market, it's going to cost 15-18% more.
Okay.
So if I can buy it at below replacement cost, then I've got this big spread to be able to manage my revenues through.
Got it.
Whereas if you're a developer and you have to build it at replacement cost in
Mhm.
theory, right?
Yeah. Okay. Yeah, because you're building it
Yeah,
right now. You're
right,
bringing it to
right,
market.
right.
Okay.
You've got to achieve a higher than replacement cost value to
Mm-hmm.
make your spread when you exit something,
Oh, that's such
or
great
yeah,
perspective.
or you've got to achieve higher rents and revenue levels than
Yeah.
the guy who bought it below replacement cost because your basis is up here and their
Yeah.
basis is below replacement cost down here.
Wow.
So your developers are super focused on. I think as a developer, you may be focused. You're focused on replacement cost, but I think you're more focused on construction pricing, probably
Sure.
development cost, land
Yeah.
basis, all in basis. Investors are very focused on replacement cost these days. Very. But if you're a net lease investor, like not net lease investors are notorious for buying things above replacement cost because
They can
you're
make it up.
you're buying a lease, the lease
Mm-hmm.
value, right, which
Yeah.
drives really strong credit quality and fantastic location. I mean,
Yeah.
you might buy something that's $1,000 a square foot,
Mm-hmm.
where maybe it's 700 to build it. I don't even know.
Yeah.
500 to build it. Just depends. But you're buying a lease,
Yeah.
right?
Yeah.
Essentially.
Hmm.
So it's definitely something people are looking at.
Interesting.
Like, how does the increase in new product in the market affect how developers and investors look at some of those things? I don't know that it does right now.
Mm-hmm.
I still think the demand is crazy strong, so I
Mm-hmm.
don't know
Yeah.
that it does right now.
Interesting.
Maybe it will if it increases, like if more and more product starts coming onto the
Mm-hmm.
market, and then you see like widening of prices.
Yeah.
Then that means if you see widening of pricing, lowering of prices, I should say,
Yeah.
right? If you
Okay.
see that happening and less competition, then I think it starts to tell you replacement cost, the value, things being bought value wise
Mm-hmm.
far below replacement cost, and that becomes a scary thing, I think, for developers. I think,
Mm.
but just one month of data is like,
Yeah. That we, we're still in a wait and see.
yeah, it's normal. I
It's
feel like,
interesting because we can kind of put a marker on this time as things are happening. We get to pivot. We're like the weather people. We
yeah,
don't have to predict what's going to
right.
be right.
We're gonna say something different next week.
Yeah.
I think the biggest thing for like why that was a headline is 50% increase in product was I feel like everybody expected this, but I feel like they expected it maybe 30 days ago. Like we're a
Yeah.
little bit late, I feel like, to
Yeah.
the
So it's almost like they're trying to get people excited.
like why did it not happen? Now it's happening.
Yeah, yeah,
Like
yeah, yeah. It's like stay in the game.
yeah.
Don't lose hope.
Yeah, you almost forget like it's just spring surge,
Yeah.
right? Because it
Yeah.
didn't happen.
Yeah.
Now it's happening, so it must be something else.
Yeah. Well, I think too, I think we also would have to look at where people are income wise. I think the people that were intentional, because I had gotten pre-approved in 2022 to buy, but that's when the bidding over ask and the waiving of inspections was running rampant, and I refused. I can't work at Walmart and pay full price, A, and B, I'm not gonna waive inspections because I know what that means. I'm not doing that. So I was on the fringe, but I had my ducks in a row and I was ready to go. So I suspect that there are people who are just like me, waiting for the right time to do something. But as we go on, and seemingly the job losses are increasing, I wonder what that leaves the people who may have been on the fridge, provided that, they're not impacted by these businesses closing and jobs firing and laying people off, how that is going to balance as we move, because you may have had a ton of cash that you were willing to put in as a down payment and such. Does that now become your yikes?
Well,
your yikes bank account?
Well, that's the behind the scenes of why is more product coming on the market?
Yeah.
Is it people that just are strapped and
yeah,
you doubled or tripled your mortgage payment now and like everything else increased and you can't afford it anymore,
Sure.
and maybe you lost your job or you got pay cut? I don't know that all that is happening in a lot of these like micro markets.
I don't think here. In the trades, they were naming DC like everybody was like panting and waited with bated breath.
I'm not surprised by that. I don't think anybody would be surprised by that.
Yeah,
right?
and it was primarily right after January when
Of course.
a lot of those Doge was
Yeah.
doing all of its stuff, but it seems to have cooled. I haven't heard anybody talk about it, so I don't know that it's trickled to other places.
I don't even think it's happened at a bigger national level, to be honest with you. Either.
Yeah.
So, but that's a good point. I mean, that's I think where those headlines are trying to guide your head. Like, is that why this is happening?
Oh, yeah,
I think
maybe,
but
maybe.
I just think it's part of the normal cyclical market.
It's so weird now because it's almost like what news sources I feel like you have to get your news from so many different places and like try and piece together what may be happening and what's in between the lines.
We always say this about Office, right? Like one week you're reading an article that says like Office is back, and the next week you're saying like Office just exploded.
Yeah.
It's so stupid.
Yeah, exactly. So then we just continue to wait and see.
Wait and see. So where do you find all this happening, constantly shifting? Where do you find the best short, midterm opportunities in the market? Like, commercial investor, whatever, commercial, residential, whatever. Where do you find the best opportunities? It's kind of a hard question to answer. Right?
We started talking about this last week, and I've been thinking about it, and more people are moving south. And then like in our market, I think people are going to have to migrate into more rural areas, further away from the city, because more people want space and land, not necessarily attainable, with the development that is happening to accommodate more families in your like 422 corridor, 476, 276 corridors. Those places are kind of spoken for. Now you kind of have to go further up, 476 hitting the Quakertown, Lehigh Valley,
Right.
Up more towards there where...
That's exactly what I was going to say. That was going to be my same answer.
Yeah.
That's where your opportunity is, I think.
Yeah. You gotta get further. And it's going to be interesting because COVID kind of pushed people out of the city into the burbs, which drove, I think, some of the demand. And then once COVID died down, people then realized, well, oh gosh, I want to be somewhere walkable, maybe cut down some of my expenses. So then I feel like some people migrated back to the city, but then now people are scared because, it's city life. It's
Yeah.
not, it's different than suburb life. The uh, quiet enjoyment is not necessarily the same. So now people are setting their sights on, okay, now what's important to me, and that's affordability, space. So I've got to go further out.
Affordability and space. Yeah.
Affordability and
And
space.
space.
And then there might be some opportunity on the commercial side to then travel with those people and now recreate what they've been accustomed to,
It's
whether it
definitely there.
be,
People want that. It's
yeah,
definitely that.
access to the
Yeah.
city. Even when we were talking with John, won't say the last name, but they're Coopersburg
Yeah.
and recreating community there, more insulated pockets. So yeah, I think it's further out.
Yeah, it's definitely further out. I agree. On the residential and the commercial side,
Yeah.
that's where there's
Yeah.
look, you won't go wrong buying in the core.
Yeah.
I mean, you'll make
Yeah.
good money, but it'll be
Absolutely.
like secure and stable good money, whether
Sure.
you're buying a house or you're buying an investment property or you're a tenant opening up
Yeah.
shop. Like you're gonna pay a lot of money in rent, but
Yep.
you're gonna make a lot of money
Yeah.
probably.
Yeah.
It'll be more stable, secure, but if you want to find opportunity, I'm with you 100%. It's
Yeah.
like you got to just spread out.
Yeah.
You got to spread out.
In your experience and based on things kind of as they are now, what does opportunity cost when you go further out on the commercial side? Let's say somebody who says, I want to skip the acquiring residential doors and get some low hanging fruit in an area that is yet to boom. What does that cost?
Like what's the uh lack of a better term here, like discount in pricing you
Yeah,
get
maybe, yeah.
going
Or,
like 30 minutes an hour
mm-hmm.
outside of like the core.
Yeah.
Um Normally I'd say like well it's asset specific.
That's true. Yeah,
Um
because that is a very broad question.
But if we talk multifamily, like I would normally say I would expect, you know, 70, 55, 50, 75, 100 basis points of like cap rate. So like that's probably it. The further I go, making my way outside the rungs, if you call it. But I feel like we just looked at something in Lancaster. I feel like and it wasn't even core Lancaster. I would expect that's what I would have expected, and I'm not seeing that now. Where it actually trades at, I don't know. I just feel like there's still this humongous supply demand imbalance. But
Yeah.
like then like look at it from a different lens. Like if you're a tenant and you had an option to rent in Montgomeryville, let's
Yeah.
say 3,000 square feet, prime retail space, grocery anchored, power center, whatever. And then you say, oh, I'm gonna go 45 minutes up 309 towards the valley, not hit the valley, but being kind
Yeah.
of like that space.
Yep.
I don't know. Maybe you go from like $30 a foot down to like 20. I don't know.
Yeah.
Yeah, I would guess somewhere around
That's
there.
interesting.
That's a good discount.
Yeah, I think that's
really
a good discount. I had gone to a dig. They are starting a commercial series.
Okay.
And I went to the talk, and the gentleman who was the featured speaker was talking us through his process of acquiring property in Downingtown. And Downingtown is one of those places to me that you're on, what is that, no, not
422? Is it 422?
Yeah. Yeah, I think that's 4. Yeah, or 322. I think it's 322.
One of those
Like you're going
Yeah.
going up, and then you pass Westchester, and now you're in that space where you're like, okay, I'm out here.
Yeah. A lot of green space, like funky stuff.
Yeah,
whatever. Yeah.
Somebody told me that, and they live in Montgomeryville area now. They were looking as far out as Macungie.
Wow.
I'm like, that's a whole new world. That's like the New York PA people.
Yeah, but if you go out there, like I've recently been out there, if you go out there, it's
like
better
here.
than here. Like,
Yeah.
and so it's really not far. Like it used to be considered like you're going, and I don't know that you even get that much more value, to be honest with you.
Yeah.
I don't even know that you do. You got to
Yeah.
go like in between where nobody wants to really be,
Exactly.
and drive 30 minutes both ways.
Yeah. Ooh, that's a
unfortunately.
good.
Yeah.
Um,
But I think there's a lot of opportunity outside of the core right
yeah,
now because I think
yeah,
people want to either people buying houses or renting apartments are either driving till they qualify or just driving till they find something,
yeah.
right? In
Oh,
the
I like
budget
that.
and with
Driving to I
space.
qualify.
Yeah. And retailers will follow. They lag, but they will follow. So I
Yeah,
think the opportunity really exists outside of that core. Just go a little bit further down your corridors and it's there.
yeah,
That's
yeah,
where you
yeah,
gotta
yeah.
look. But
Not so much needle in the haystack, but
yeah.
still doing the math and
So
making sure that the
yeah,
math is mathing.
exactly, exactly. But I think there's a lot for us to
Explore.
yeah, a lot for
Yeah.
us to explore, a lot for us to keep looking at. Like, let's just keep an eye, I guess, on where inventory goes month over month. I think that'll tell us a lot. It'll tell a lot of investors,
Yeah.
developers, tenants, users a lot about what happens inventory wise if we start to see price reductions more
Absolutely.
consistently.
I feel like we're going to be on this topic for some
We're
time, like,
definitely
different
yeah,
variations of it, but it's going to be kind of the anchoring element that we have to look to as we're assessing the marketplace and what's happening and the trends that we're seeing emerge.
for sure. Yeah, I'm looking forward to next week's discussion. We can see where
too.
it picks up and
Yeah.
what changes, if anything, which probably will be everything.